We are live. Welcome to the second live stream for Team Margin of Shavety. All the Australian team from last week are probably mostly still asleep, but we've got John holding out for Team Australia down the bottom there. And we've got a few Americans in the building. How's it going, everyone?
Good.
Great to have you all along. Yeah, this should be a fun one. We've got we're slowly getting the mows coming together. We're not quite halfway through the month. How's the mustache growing process going for everyone so far?
Yeah, I don't have anything to show for it. I definitely can't grow a stash, that's for sure. It's just proved that a stash is not in my future in any which way. But it is what it is. For the cause, I'll just get some black tape and just put it on my lips and call it a day.
I see a couple of hairs there.
I mean, so far so good. A little itchy, but it's getting there.
Mm-hmm.
Yeah. I got the stash coming in back. I haven't shaved everything else off yet, so
yeah,
we're getting there though.
Yeah,
I'm not like
nice.
you, Tom, though. I can't just like push my lips together and just grow a stash like that. So.
Well, I think it was Michael last week. He was sending us photos like 3 or 4 days into November and had a full-blown mustache going.
I know.
I don't know what's happening with that man, but
I was just getting over my razor burn 3 days later.
Yeah, and then, well, I mean, we've got Hamish and Brandon. I think they may struggle a little bit. Brandon tells me his is going to be pretty ginger, and Hamish turned up with like a pack of fake mustaches that I think he's going to suffer through.
I saw that. I watched about half that stream, but...
Yeah, so that should be pretty interesting. Look, I'll just I think for most of this we'll basically just take questions. So if you guys have got any burning questions, definitely drop them in the chat. The pinned comment in the chat should take you to Team Margin of Shavety on the Movember site as well. So absolutely no pressure at all, but if you're interested in contributing to the Movember Foundation, feel free to do that. And super chats should be turned on for this stream as well. So I'm going to be putting 100% of the proceeds that come through from super chats and that sort of thing through to the Movember Foundation as well. So feel free to donate on there as well. I thought just before we get into it, though, I will give a quick update on kind of where things are at with Movember. So I'll share my screen here. Hopefully that's coming through. So this is, our Team Margin of Shavety page over on Movember. So this is where the link on that pinned comment in the chat will take you. So I think initially when I set this up, we set a target of $2,000. I think this is all New Zealand dollars, and we blew through that pretty quickly. So appreciate everyone who's supported that so far. We had to pull a Cathy Wood Ark Invest and up our price target. So I've pushed that now out to 4,000, and we'll see if we can chase that one down. So that's where things are at. If you scroll down, you'll see the full team kind of in there and a few progress pics as well. So feel free to jump on there. Like I say, absolutely no pressure, but anything that you can contribute would be super appreciated. All the money goes towards a great cause. Movember Foundation supports men's mental health, suicide prevention, and the 2 male-only cancers as well. So, without further ado, should we jump straight into some questions, guys?
Let's do it.
Let's do it.
Rightio. Well, I think we should just start with the elephant in the room because the first 3 questions are on the same topic, which is all around Alibaba and Monish selling it. We got a 13F out of Monish Pabrai yesterday after talking pretty positively about Alibaba, and I think buying it in the first and second quarter from memory, following Charlie Munger purchasing it, and now he's sold close to 80% of his stake. Anyone have any hot
I'll give you guys a
on what
thumbnail.
Monish
I'll give you guys a thumbnail. Okay.
Yeah, I know. For me, I was completely shocked. I started. I found it on Dataroma, and I actually looked at other websites just to make sure that was still a valid thing that was going on. I think he sold like 77% of his Alibaba stake, which was quite shocking to me. And I noticed there were a lot of other super investors that were selling a lot or at least reducing, positions throughout the third quarter. But I actually watched a CNBC video of Monish just from a couple weeks ago. I think it was the Indian version of CNBC. Yeah. He was very bullish on the stock market. And part of the video I did yesterday was very speculative on maybe You know, a lot of super investors kind of reducing positions based on inflation and some other stuff. But a lot of people comment, and after thinking about it overnight, I think they're correct that he's gearing up maybe to buy something else. And there's a lot of speculation. Maybe it's Tencent, maybe it's Prosus, maybe it's Naspers. Just because he's been talking about Tencent so much recently. I think he's put out 3 videos, I want to say, in the last like 2 weeks, which is very unusual for Monish, talking about Tencent. So I'd love to hear from you guys, and what do you guys think about it?
I honestly, this is new news to me, but I've been completely MIA for a while. I saw your video get posted, but I didn't even watch it. Does it say anything, or has anyone dug into anything? Like, the first thing I'm thinking of right now is, did he just transfer the shares over, like, to the Hong Kong listing, or?
So he sold a lot of like, it wasn't just Alibaba. I mean, most of his portfolio he reduced quite a bit.
Oh, okay.
So it wasn't just Alibaba. I mean, he sold a lot of Shinnikin and a lot of other companies he had. So it wasn't just Alibaba specifically.
Oh, okay.
Yeah, I'll see if I can bring that up. Because the 13F just shows us 3 stocks for Monish Pabrai.
I got
you. You got it?
Yeah.
Have you got the full international portfolio on ticker there
on
somewhere?
ticker?
Yeah. Because that should show us a few things. And maybe just while you're pulling that up, Kelechi, I failed to introduce the team for anyone that hasn't come across all of you guys before. So I'll quickly go around. Everyone that's on the stream, their channel links will be in the description of this video. So if you want to go and check out anyone that you maybe not following already, definitely go ahead and do that. But we've got Viom from Superior North Investing, I believe is the channel name. We've got Kelechi Waba, which I believe your channel name's just your name, right, Kelechi?
Yep.
Great.
Pretty much.
We've got John from Australia, and I believe your channel name is just your name as well from memory, John, but correct me if I'm wrong. Yep. Justin from J Money, Andrew Latenda, and myself, Investing with Tom. So I'm assuming if you're on this channel, you're already following me, but feel free to go and check out some of the rest of the crew as well. All right, I see you got a screen there, Kelechi. I'll just bring that up. Cool. So yeah, this is all the publicly available stuff we can see for Pabrai, and he's reduced a lot. Yeah. What do we got? So yeah, there's a few different dates on here. If you maybe sort by holdings date, even Kelechi just sort of
here we
newest to oldest.
There we go.
Yeah, so Nice Holdings Company, which I think is a Korean stock, has been in for about a year. Micron, we've got a really small ad, which is a bit of a weird thing as well. Rain Industries is one. Yeah, Rain Industries is one he's had for a few years, which he's sold a lot of. And then Baba, Shinnikin, and some other stuff as well. So interesting moves.
Isn't he down like a substantial amount on Alibaba?
Yeah, it's
like
hard to say exactly.
Investors right now.
Like, yeah, I would guess.
Sorry.
Yeah, I would guess maybe 20 to 30%.
Yeah, that's what I would guess too.
Yeah, that's weird.
Yeah, I think he found a better allocation to his money, something that's going to give him a higher return. And it's better to take that L on Alibaba if he thinks that he's going to have a better return on another security.
Yeah.
I don't know. Something that doesn't add up to me.
It's just
I don't know.
For me,
it just smells. I think there's something else going on that we haven't found out yet. That I think we will.
Yeah,
but
yeah, I definitely agree with you on there. It just seems weird that it feels like, I don't know. There were a bunch of other investors also that were like selling out heavily. I think Justin, you brought this up in your video where it was like a bunch of investors were just selling out of a bunch of companies, and so it's super weird to me, the whole status of it, or just the whole, like, especially for a lot of investors who are very much like, we're here for the long term. We only care about the long term. But then it feels like, I don't know what switch got flipped, where it just seems like all of them are kind of now like, oh, we need to make adjustments all at the same time. And it's just extremely weird. Everything just seems off. I don't know what's going on.
It definitely seems like David Tepper has been kind of leading that. I mean, he's been talking really since I think the first quarter. Well, so he came out in March and said that the market was great. It's the best place to be. And then here in the last like 3 months, he's completely changed his philosophy. And if people don't know, he's the owner of the Carolina Panthers. And he's got like, I don't know, he manages like $5 billion worth of the stock market. But he came out in October and said, the stock market is not a great place to be. He wouldn't be concentrated in there. So it's kind of interesting, that same quarter is when a lot of super investors were, reducing quite a bit of their positions, just in general.
Yeah,
I don't know.
and just sorry, Andrew, just to pull away from Alibaba for a sec. I don't know where this has come from, but we've had about $70 worth of donations just come through as well. So appreciate whoever that may have.
Was it $69 specifically?
Okay, I see what's happening. Okay, yeah, I can see someone actually in the team has $69 to their name, so that explains that one. Rightio, let's. I wonder if we maybe just give everyone that's kind of watching live a bit of background on our sort of individual investment strategies, whether we maybe talk through that as well. I know a lot of us follow like a value investing style approach, but we've got a few different kind of approaches between us here. So I've got a question from Jonathan. What are your approaches / strategies to investing? John, do you want to maybe kick us off in terms of what your strategy kind of looks like in a nutshell?
Yeah, sure. In a nutshell, I invest in property. At the moment, my property make up most of my portfolio, 70%, and also a bit of crypto. But also like invest in a bunch of different things like crypto, stocks, index funds. I also have got some Forex robots. So I'm a bit of opportunist, and in general, I do buy and hold in general. But when I see an opportunity in the market, like short-term trading, I do that as well. Not manually. I use like AI and robots and all these newly available tools that we never had before. So I would say probably 20% of my portfolio it's speculative, as in buy and hold, speculative in the market. And in general, I see the stock market is overvalued in my opinion. So I'm trying to just making up a lot of cash, just accumulate cash, just in case if anything happens. So that's just me in general.
Yeah, cool. I suspect you're like, I think myself, Viom, probably Justin and Andrew have fairly similar strategies. But I think you'll give us a slightly different perspective on some of that stuff, John. And Kalichi, how would you describe your investment strategy? Because I know you do a bit of a mix of stuff as well.
Yeah, I'm all over the place. Is the way I'll say it. Kind of, John is more in the sense of like save up to do an investment. I'm more in the sense of like I don't want to keep any cash with me. I just don't want to have cash at all. So
cash is trash.
Cash, literally, like like right now I have like a bit of cash, but that's just because I'm trying to buy a house, much like Tom. But other than that, I literally invest everything and put something in everywhere. And I do basically a bit of everything from I do single stocks, index funds, and also a little bit of crypto as well on the side. But my investment strategy is I kind of try to think of myself as like I'm trying to emulate a Peter Lynch style of investing, where it's where I just kind of have buckets of companies that I want to own for a very long time and just want to have ownership in those companies for a very long time. Generally, I have like what I like to call the forever holds, which is like maybe 3 or 4 companies that I just don't think that I would ever sell out of. If I sell out of them, it's going to like hurt me to my soul to have to let go of those companies. But those companies are just sitting there and just kind of compounding on their own. And then I have speculative companies that I love their stories. I love the stories that they're telling, and I want to be a part of that story. So I'll put like a little bit in those companies just to kind of watch them grow and see how they evolve over time and just be a part of that without really necessarily touching it too much. And then generally, I just dollar cost average on a regular basis into index funds. And depending on what the week is and what the day is, I do have strategy where like $100 off of my paycheck goes into like single stocks. So depending on what company at that point in time is the most attractive company, I'm just buy that. So like all of last year, my main focus was big tech. Was like, I want to own all these companies because most of them were massively, well, I won't say they were undervalued, but they were very much at a position where I was like, yo, I want to own these companies for a very long time. And so I just was buying a bunch of them every 2 weeks from. And so I did that most of last year, and also did that with like Bank of America and those kind of companies, just because I was like, everybody's hating on financials and this thing looks too interesting. So kind of opportunistic, kind of like what John was saying as well. I take advantage of what's presented to me. And then my brother got me into crypto, which has been just a buy and hold thing for me with a couple of cryptocurrencies. And then I started learning about some of the things within cryptocurrencies where it's like, oh, it's not all just pump and dumps and trash. There's actually some stuff that's actually really, really interesting happening in that arena. So it's kind of all over the place for me, but the general thing is buy and hold, dollar cost averaging is my decent base level.
Mm-hmm. Yeah, cool. And how's the property or house search going at the moment? Are you still saving up for that?
My heart, it just feels like every time I'm like, yeah, let's do it. It's like, oh, sorry, house prices just run away from you. And it's just like, and I don't even live in like New York or LA or anywhere else. I live in the southeast, so prices are not as crazy as it is elsewhere, but you still get into bidding wars, and I'm not about to sacrifice being able to invest in other things just to buy a house. So I'm just like, I'm gonna keep renting. It's not the end of the world. I got time. As much as I would love to like do other things like house hacking and Airbnb and all this other stuff, if I buy it at the wrong price, if I just overdose on having a house, I won't be able to do all the other stuff that I want to do. So just twiddling my thumb and just hoping and praying and keeping the search alive, and hopefully something comes up soon.
Yeah, I'm in a pretty similar boat. It's like, I mean, it's a funny one because people have kind of been saying that the housing market in New Zealand has been in a bubble or stretched or expensive, but they've been saying that for probably 20 years at this point. And it kind of just keeps going up. So, and I think it's pretty similar in Australia, and it's probably getting towards that point, I would say, in the US, just from what I've seen. And it's really not unusual to like go and try buy a 3 or 4 bedroom home or something. And, if you're trying to analyze it like, I would do with a real estate investment trust or something, like try and look at what cash flows are coming off this thing, even though I intend to live in it, if it was a rental, what would that equation look like? It's not uncommon to see like 3.5-4% rental yields before you pay any sort of cost, which, it's kind of hard to make the maths work on that, particularly if interest rates start going up again. But it's maybe a story for another day. Viom and Justin and Andrew, did you guys want to give us a brief kind of overview of how you think about like investment strategy? As far as I understand it, I think you guys are all fairly similar in terms of like a value approach. But Viom, did you want to maybe kick us off there? You might just have to come off mute as well.
Yeah. So the way I look at it is look at the return on equity of business. Again, margin of safety is, of course, the first thing. I don't want to lose my principal. So any investment that I make, I have to make sure that I'm not going to lose money. And then the thing that I look for is a high return on equity or growing return on equity. At the same time, I don't want the company to have a lot of leverage because that's another way that stocks can have high return on equity if they're using leverage. And then management, right? What kind of ownership do they have in the company? If they have skin in the game, then I like that. And is it cheap? That's the bigger thing. So pretty much like the 4 checklist items that Lilu has, right? What kind of business? Is it cheap? Management? And what am I missing? So cool. Those 4 things are essentially the gist of investing to me. And that's about it.
Mm-hmm. Yeah, nice. Justin?
Yeah, sure. I think my foundation of investing comes from Phil Town. that's, his Rule 1 investing book really resonated with me. Just my philosophies in general. So he always talks about the 4 M's, management, margin of safety, meaning. So those are all big. I'm also.
You did a Philtown course as well, is that right?
I did.
Like,
yeah,
you went to one of his workshops.
I did. Yeah, I took his 3-day workshop about a year ago, actually. So, yeah, it was tremendous. So definitely that has resonated with me a lot. Now I'm an accountant by day, so I'm very analytical. So I also like looking at the numbers from, ROIC and all the growth metrics and stuff like that. So that's so value investing. I do reserve about 5 to 10% of my portfolio kind of on the speculative side. Same thing kind of Clutchy talked about, companies that you might really like, have a great story, but maybe the value doesn't look like it might be there. But typically it might be another value investor that has invested in that particular company that has kind of caught my eye too, on that side. So that's kind of where I come from.
Mm-hmm. And how do you think about the stuff, Andrew?
Yeah. If I ever wrote a book, it'd probably be called Keep It Simple, Stupid. That's kind of the way I think about investing. I think 99% of people overcomplicate everything. At the roots, you're just buying a piece of a business. You're giving your money to a company to use your money to make more money. I mean, it's that simple. And so a little bit about myself. I'm obviously, so I don't know if any of you know me outside of here really, but I'm a construction worker. That's what I do. And I just was like, hey, I got money coming in. How can I invest this at a higher rate of return than most people? And that way I can just, hopefully one day retire early. Well, you need to think from like first principles. And I think too many people are just investing to, oh, I want to beat the S&P 500 and I want to be a millionaire just for the sake of being a millionaire. Me, like my body's like all kinds of effed up and I'm only 25 years old. So I was like, what's the purpose of me investing? And when you really think back to it, it's like, I want to invest in order to not have to work, a daunting job on my body all the time and stuff. And I also have no desire to go back to college or anything like that. So I'm like, okay, let's just do this and do it how I know the best way to do it, which is just to keep it simple. So I find businesses that are growing. I find businesses that aren't using a lot of debt, because I did that once at the beginning of COVID and I lost a shiitake ton of money. And I was like, okay, don't do that again. Yeah. And then just buy them. So fun fact, I actually worked outside. I did construction work outside of the house that Peter Lynch grew up in as a kid.
Wow.
Yeah. So like I think I thought that was a tidbit because I just started thinking of Peter Lynch, but like it's very similar to like the Peter Lynch approach. Like find a business that you understand. Like if I were to show you my portfolio, I can list off every company I own right now. Right? It's Facebook, which I understand like the back of my hand. It's very simple. Alibaba, which many of us are all invested in right now. I have True Leaf Cannabis, which is a cannabis play in the United States. I have Sprouts Farmers Market, which I'm sure Justin obviously knows very well as well. And I have the Boston Beer Company, right? That's like what my portfolio is. And every single one of those businesses I can understand very well. The exception of Alibaba is more of like a clone. But all those other ones, I understand like the back of my hand. I don't, for example, like you guys like invest in like crypto and stuff like that, right? Real estate, I have no desire to learn about. I don't understand, so I don't invest in real estate. Crypto and stuff, you ask me what it's worth. If I can't tell you what it's worth, I have no idea. It's no different than like buying art or something like that, right? Like there's obviously a value to it, but I have no effing idea what the hell it's worth. So I don't buy it. So businesses, investing in businesses and stuff, what's it worth? Is it going to grow my capital for me? And I put my money to work there. Like it's It's not, I'm sure, an exciting answer for anyone watching, but I literally have like 4 things I look at before buying a business. And if it doesn't match my investing protocol, I just simply sift through it. Like I did a video once that got like 200 views. It was like one of my worst performing videos, but was probably the most valuable video I ever put out. And I was like, because people always ask me, how do you scan through stocks? How do you find businesses that you want to invest in? And I had about like 25 different stock recommendations. I was like, I'll do a lot. Like I'll walk through exactly how I look at companies for you guys. And every single business, I think with the exception of like one, I was on to the next within about like 20 seconds. And everyone's just like, you don't know what you're doing. You have no idea this is going to be the next best thing. And I'm like, you guys don't understand. Keep it simple, stupid. If I don't understand the business or I don't think it's going to be like a moneymaker down the line, compounding my capital and stuff, it has too much debt, just move on to the next one. And yeah, that's it. It's a long drawn out answer. I know I'm not the best at explaining things, but yeah, I think that's my investing philosophy. Keep it simple, stupid.
Yeah, I like it. Well, if you do ever write that book, I'll purchase that on pre-order. It may be one chapter by the sounds of it, if it's just a short list. That's right.
I was actually thinking of this the other day. Fun fact, I was thinking of this the other day. You know, like people, for example, like Hamish, he has like a course and stuff, which I hear actually from Andrew Brown. That's actually pretty good. But so like people have investing courses and stuff. I said, you know what, I might put out like a $25 course that's just going to be a 1 hour long video. And it's pretty much just going to be like, for example, Peter Lynch put out like those audiobooks back in the day that I think was like a total of like 10 hours or something like that. And it's going to be even that, but more simplified. And it's just going to be like an hour long video. And it's like, this is everything you need to know about investing. And I'm telling you, from like someone working 9 to 5 who has cash flow coming in, you can beat the market hand over fist. Like, so I'm pretty open about this on my YouTube channel. I've grown a $25,000 portfolio 5 years ago into about $225,000 today. And the goal is to not worry about anything else. Like, I'm just in my own lane. I don't give a flying F about anyone else. I'm sorry. I really don't. I'm just in my own lane because I want to retire early and not have to keep, breaking my back working construction and stuff. So I hope that I'm more relatable to a lot of people out there who are also working a 9 to 5 and they, aren't going to be like running their own company and stuff like that. But they're like, hey, how can I retire early? I hope to just kind of set the example for them. So I'm not there yet though. So I guess we'll see. We'll see in another 5-10 years, I guess.
Well on the way.
Yeah. So we're getting there. Keep it simple, stupid.
All right, you guys seen any questions in the chat that you want to have a crack at? If people have got questions, definitely pop them in there. We're getting a few around multiple price Alibaba. We have already covered that, so you may have to go back and watch the replay or go back a little bit on the stream for that one. But if you got any questions, throw them in the chat and we will we'll have a crack at them.
It's a funny question. How do I get rich quick in the stonks market? It's pretty funny.
Ask someone else. That's your best way. Because I don't have the answer. Ask someone who's rich.
You first get what is that? I saw a meme on Twitter. First, I have $1 billion I have $1 million in the market. My parents gave me $1 billion, and I lost it all. Turned it into
how to become a millionaire overnight.
Exactly.
It's like invest $1 billion in Dogecoin or something and wake up with $1 million,
lose it all. There's actually a pretty interesting question on here I know, like, I think only myself and John are in crypto of any sorts, and they said, how do we determine the long-term value of a crypto project? Which it's an interesting question because I cannot answer that. I only know one project that I'm really in on and only know one cryptocurrency that I care about, and that's Ethereum. And that's basically because a lot of stuff is built on top of it. Everything else, I'm just kind of like, kind of going to what Andrew was saying earlier is like, I don't really care that much to learn because it's time. Like, there's only so much time that we have in a day. And if something doesn't interest me, I'm just like, all right, cool. So the long-term value of a project, it depends on the team that's putting it together. Just like looking at a business, we look at the management of the business and we look at the possibility of what that business could do. If they're creating something that nobody wants, then it's kind of a waste of time anyway. Even though you may love it, it doesn't matter if 99.9% of the population is like, yeah, this is a waste of time. So it's just like looking at a business as well, looking at crypto projects that are out here. There's a lot of cool concepts, but when you look deeper into it, it's just kind of like, do people actually want this? And a lot of the time the answer is no.
Mm-hmm.
I was shocked to see how many different cryptos are out there on the market. I mean, there's tons. I mean, how do you determine like which one is better than another? Because there's like, obviously that, you know, I don't know enough about crypto even to figure that out as far as like mining and all other kind of stuff. So how do you figure out like a Cardano is better than like a, you know, a Bitcoin or Shiba Inu or all that kind of stuff?
Yeah, I think if I can just add on the crypto, like long-term project, honestly, nobody knows. That's my opinion. And like I only hold Bitcoin, Ethereum, and Cardano. That's the only thing I care about. I just buy and hold. But in terms of like smaller crypto, I personally feel that the only way you can win consistently in smaller crypto is to invest in a bunch of them. It's like a venture capitalist that you invest in 100 businesses and then you just hope one of them gonna 100x and then it's gonna cover all your investments. And they cover this concept in Psychology of Money. If you guys have read the book, it's about an art dealer where they have got like a Picasso painting and they have got all this great painting. And then when they ask them, you know, what's your secret? How come you kept on pick the winning paint? And they all said, oh no, we just we just invest like 1,000 of them, and then we just hope that one of them gonna cover, you know, it's gonna 1,000x or something like that. Because I have got experience in crypto a little bit, you know. They have, you know, they said they got this project and I can see it's an app for NFT. Sorry guys, the sun is coming in to my face.
All good.
Ooh, like doesn't look great on the camera, but yeah, so yeah, crypto is just basically you just wanting somebody else paying more than you. You know, like that's why Warren Buffett doesn't like it. It doesn't generate cash, and yeah, so it is very speculative. You know, it suits some people, but yeah, it's not me for all this smaller crypto.
Yeah, it's interesting. It's like the VC style approach. I sort of get that argument, but it does in a lot of ways sound like a gambling argument to me. Like I'd rather just hit base hits like on things that I'm more certain about.
Slow and steady wins the race. Yeah,
try and stretch for 100x, but lose on a bunch of them.
I have a simple philosophy too that I implemented about like, I don't know, whenever the cannabis bubble was like 2 years ago or something like that. And it kind of goes back to Peter Lynch's cocktail party metaphor that he uses. And it's like, if everyone's talking about something, I'm probably not going to invest in it. And honestly, I feel that way about like the overall stock market lately, like over the past like years, 2020, 2021. It's like, if everyone's talking about this right now, something's sketchy, because I'm the only weird one of like everyone I know who's actually fascinated about the stock market. Yeah. No one else is as weird as me. The fact that everyone's taking to Facebook and talking about it, there's something a little fishy. So that's when it's like you need to just like take a step back and not like blowing smoke on crypto and stuff, but just that's the way I view crypto. It's like every headline lately is just always about crypto or Tesla, but it's like crypto this. And so like my view on it is like, if everyone's talking about it, I should probably just walk away. And I could be wrong. Obviously, there's a big chance I'm wrong. I've been wrong 1,000 times in my life, but that's just like one of those simple rules I abide by. It's like, if everyone's talking about it, I probably want nothing to do with it. So, yeah.
I guess part of it for me is also, so for those, I'm also an engineer. So there's a fantasy aspect to it for me in the sense of like, yo, we can create this stuff. I don't know what it is about engineers. We always feel like we can change everything to make it the way we want it. But so the story for it, again, I talk about stories when it comes to investing. The story for me of like the possibilities of like Web3 with the various aspects of it it makes me more enticed and more entertained to actually like learn about it. Whether it's things as basically like stable coins, and then learning about staking, which is now, well, we talk about like, it's no longer just about somebody else is going to pay you more for it. Now it's like you're actually getting paid for loaning out your crypto to other people, because in other countries, currency exchange, all that stuff. So there's also that benefit as well in it. But again, we go back to the basics of it, of what John said. There is very much that we're all just trying to find the greater fool of, hey, who's going to pay more than I paid for this thing? Because in and of itself, it's not necessarily about to be world changing. I don't think it's going to replace our central currency system. I don't think it's going to do any of that stuff. But I do think there is room for it in certain aspects of things. But yeah.
Mm-hmm. Yeah, I like it. Interesting question here from Liam. Because I know, nice, Andrew. I know.
He's like, go buy Boston Beer stock right now.
No, don't. Let it keep falling. Don't touch it.
Right. Question from Liam. Given all the talk of high markets and uncertainty, can everyone give their current cash position or cash percentage, or maybe even just a quick fire, like round the group, of how you think about cash positions as well? I know Kalechi already mentioned that cash is trash and we should just get rid of that stuff as soon as possible. But how do the rest of you guys think about this?
I'll start. So I think my opinion on this has changed over time. I have a pretty small percentage in cash. I would probably say maybe 10%. And in fact, most of my cash is tied up in options. So technically, it's maybe not be cash, but I could get out of that position if I need to quickly. I don't have millions and $1 million worth of money in the stock market. It might change when I get to that point at some point, to have more cash on the side. But at this point, I feel like I can take more risk, and being in the market is the key, because you don't know when it's going to go up. You don't know when it's going to go down. But I think more times than not, people miss out when they're not in the market. And is my personal opinion on that. So I have a very small position in cash, and that's kind of what I'm sticking to right now.
Mm-hmm. Viom, how do you think about this?
Yeah, I think of it from an opportunity cost standpoint. And I'm struggling with that right now, because when I look at Buffett partnership letters, he always says that, hey, if you find something, an opportunity that comes about, pay the taxes, get out of the investment that you're in, even though it may give you a good return, and buy the thing that's giving you a higher return. But now he preaches that, hey, it's buy and hold, take that stock to your grave and never sell. So it's a small percent. Cash is about 10, 15%. And then when opportunities come about, which I have an opportunity now, but I don't have the cash in hand, which would mean that I would have to liquidate, my existing portfolio stocks, or, put my money in, personal money, into the, Superior North's portfolio to buy that investment. So, like we mentioned earlier, right? Cash is trash, but at the same time, you do need cash when an opportunity comes about. And I'm in that position where the Superior North is low on cash, and I'm like, need to buy this, but I don't want to liquidate my Tochu or Baba investments. So that's about it. My take on cash.
Yeah, I have a pretty similar approach. I think I'm very roughly 10% cash if you don't include like house buying money and that sort of thing as well, because I kind of think about that separately. But yeah, I mean, I'm a very sort of bottoms up investor of like, let's try figure out a business and then kind of go from there, rather than, I think the stock market's expensive, maybe it's a good time to get into some other asset class or go to cash or whatever. I think that's a bit of a fool's game in many ways. So it's basically about, if I find something interesting, I'll buy it. With my current portfolio, like I'm only a few years into investing really. So, my annual savings make up a fairly meaningful kind of portion of my portfolio. So I think I can afford to be more fully invested than maybe if I was managing larger amounts of money, where it's more like a fixed pool of capital, if that makes sense. But yeah, I think just focus on the business and the price rather than broad market valuations. Anyone else want to add to that?
Yeah, if I can add to it, like I have a very different strategy in terms of cash because I have got property as well. So like I can refinance the property. So I've got leverage in that area. And at the moment, I probably only got like 10% cash. But this is the reason why I do short-term trading as well. This is the reason why I do short-term trading because as a buy and hold investor, right? If the market drops 30% tomorrow, you can't take your cash out, like your money tied in there. But if I do short-term trading, that means I do not have any position. I just do an in and out very quickly overnight. That means my cash is there while I'm building up, 1% a day, for example, or 0.5% a day, like a very small increment with a very low risk. So like I've got a very different strategy. If the market drops, say 30% tomorrow, I can liquidate some of those cash in different portfolio, and then I can take advantage of it. But also in the same time, so I have got a buy and hold portfolio where I can just hold it forever. But I also have a short term where I can move cash around. I can refinance my property. I can do all this bunch of things to take advantage of the market. So I'm a little bit speculative in that area, but I make sure I've got my emergency funds, all my expenses covered, and all that stuff. So that's just me.
Mm. And presumably you've got debt on the properties which needs to be factored in as well. How do you think through that?
Yeah, no, that's correct. So I keep my property at least at 80% LVR, loan to value ratio. And all my properties portfolio, they're all cash flow positive. Like I don't need to put in more money every single month. Yeah, so yeah, I factored all those into the calculation to make sure that if anything happens, it's going to be fine. For example, if I lose my job tomorrow, it's going to be fine. So I have sort of making sure the debt is covered for. I've got fixed term interest, just to cover that for the next 12 to 24 months, and I can liquidate some cash if I need to. So even if I don't get a rent for the next 24 months, for example, I'll be fine. I don't need to sell the property for the next 24 months if I don't get rent coming in.
Mm-hmm.
Tom, do you share my see my screen I'm trying to share or no?
Yep.
All right. There. People can take us. Am I on? I don't know. I'm on the other page. All right, people can just take a screenshot. That's what I'm holding for cash. That's my portfolio. There's my answer. Okay. Nice.
And you got a big chunk in options as well. I see. How do you what's going on there?
Yeah. I just see very similar to Justin. I think we both kind of took that from Philtown, and it just something that resonated with me. It's like if I can't find an investment, what's a business I want? Because I'll be honest with you, my watch list is about 20 companies, and about 10 of those are businesses I'm like still looking into. Like I have all the companies in the entire stock market. There's probably like 10 that I can say I really, really, really want to own. And I already own like half of them. So it's like
so you're mostly selling puts, or what are you?
Yeah, so I just sell put options. I know Andrew Brown does the same thing. Justin does like the same thing. It's just find out. So like I have my hurdle rate. Like people are like, oh, I want to beat the stock market and stuff like that. The way I look at it is like all I care about is compounding my personal portfolio at that Monish Pabrai number, the 26% per year, because that gets you to the promised land in no time, right? So I just kind of do the math out, and I'll sell a put option.
That gets you to Elon Musk status if you run it long enough.
Yeah, if you can do it indefinitely. Yeah, I don't think I'll ever have that much success, but I'll sell put options 12 months from now, because like in my mind, once again, going back to keep it simple, stupid. It's like if it's a wonderful business with a beautiful balance sheet that I don't really have to worry about too much competition coming in like over the next 12 months, and management seems fine and stuff, just something super, super simple. And let's say the business, to buy it at a price that I want to purchase it at anyway, is offering me, let's say for that specific thing, 15% or something like that. over the next, in just for like a small chunk of change, and I look over the next year, and it's like, okay, that sounds pretty good. I still want to grow at 26%, but don't forget, I'm also, contributing to my portfolio as well every single week because of my paycheck coming in. So 15% ROI on something just to tie my cash to it for a limited amount of stocks I'm interested in anyway, that's completely okay with me. So yeah, keep it simple, stupid. I don't need to make 100% over the next year. I'm very happy with 15% on a certain chunk of change. And a lot of times you're able to close it out. Most of my options I'm closing out every like month or so because the bid on it, I bid when there's like a lot of downward volatility. I sell my put option, and then once it stabilizes, the internal volatility or whatever it's called, the IV of it, goes way down, and implied volatility, that's it, goes way down, and then the actual option like goes virtually to nothing. So you're able to close out your position, let's say, with a total of a 13% gain in the course of like 1 month, and it's like, okay, sounds good to me. So yeah, that's why I have a bunch of my portfolio input options. I also had the S&P 500 index, was actually my largest holding for a while, which is why you see a bunch of cash in my portfolio. I actually had a very small amount of cash, but I sold that for 2 reasons. One, I think I can just do a better job investing myself, which might be ignorant to say, but is what it is. And number 2, which Tom, you might vaguely know about, but potentially for a business opportunity. But anyway, that's the side. So yeah, so there's reasons why I am holding a lot of cash right now. Typically, I'd hold a little bit less cash, but it doesn't bother me to hold cash anyway because selling put options, you're earning cash on your cash. So is what it is. Yeah.
Yeah.
So a lot of cash doesn't bother me. Yeah.
Yeah. Cool. I'm interested to see how that top secret business opportunity plays out. That's an interesting thing, but maybe I'm
not the head honcho, so we'll see.
Yeah, okay. Right. Any other questions? Drop them in the chat, guys. We'll keep working through this. I see After Dinner Investor is in the house. If anyone doesn't know, After Dinner Investor is king of the chat over on our Punch Card live channel. So thanks for tuning in, Jason. He says Charlie Munger told me not to trade options. Oh well.
Yeah, options are the ultimate money glitch. In my opinion.
So there's a difference. Oh, what were you saying? Go. No,
I was just saying options to me are like, especially when you sell options, are like the ultimate money glitch of just basically if you're doing option plays, which put options or selling covered calls, is basically like if this stock goes to the level that I want it, I get to own the business, or if it doesn't, I get to collect the premium and then rotate and just keep on getting that premium over and over and over again. So to me, it's kind of a cheat code of like getting your money to just keep working for you in another way than the usual, I'm just going to buy and hold. And it's great to buy and hold for sure. Like you can't beat that on the long term, but in the short term, it's good to get some extra cash in your pocket as well. So
yeah, maybe Justin can talk on that as well too. But for me, I only really sell put options though. So there's a specific, the comment he just left there about, Charlie Munger said never to dabble in options and stuff. He was more so talking about buying because you're leveraging yourself when you buy. It's like synthetically going. It's synthetically leveraging yourself. That's all it is. That's my first wife's name is. That's good. But no, you're synthetically leveraging yourself to the upside when you purchase options, which is where people get crazy gains, but they can also go broke overnight. That's what he's talking about. I mean, Berkshire Hathaway has sold put options in the past, most notably in the financial crisis. So selling options, you have to put the money. Well, actually, I think they were able to not have to put the money up. That's like you can only do that if you're like Warren Buffett. But they sold put options during the financial crisis anyway on the S&P 500. And like when we do it, we have to put the money aside as collateral. So there's really no risk there. I guess the risk would be you trying to gamble on a stock and the stock going to zero. That would be your risk. But if you know the value of a business and stuff, selling put options to earn cash on your cash in my mind, it's smarter than keeping it in savings. There's a small opportunity cost you have to calculate in there as well. But Justin does options a lot as well, so he could probably talk on that too. Put options, I should say.
Yeah, so I sell call options and I sell put options. So selling options is really the most. What I found out about, I think it's one of the most genius ways to really deleverage your risk and be able to earn money right up front. So you're kind of the house. So essentially, what happens? It's kind of like I kind of think of like an insurance company, I guess you could say, where you're going to buy insurance from a company and they say, hey, we're going to guarantee to insure your car over this period of time. And if, you get in a wreck, we'll pay for it. However, if you never get in a wreck during that entire time, they just pocket the money. And it's the same idea with selling put options. You're collecting premium up front and you're hopefully trying to buy a company at a cheaper price than what it is now. So it's like a total win-win situation. If the stock drops and it goes below your strike price and you're forced to pay for it, you're willing to pay for it at that price anyway. Where if the stock goes up and you don't end up buying it, you get to pocket that money and then turn around and then sell more put options if you want to. Typically when I sell put options, it's usually in the 45 to 60 day range generally. And I'm always trying to get at least a 20% rate of return. Depends on the company, depends on, what's going on in the market, what kind of returns you can get on that. But on the flip side, I also like to sell call options. So maybe it's a company I've owned for more than a year and it's got up past its intrinsic value. And so I decide to sell call options. I collect a premium. If it goes above that, it's called away from me. But either way, it's a win-win option, situation. So being able to collect that premium and generate more income in your portfolio is absolutely incredible to be able to do. So yeah, I think selling put options is a great way to institute anybody's kind of portfolio. It's fairly, I won't say easy to understand. It definitely took me a month or two to fully understand how to use it, how it works. But if you can do it, there's a lot of studies out there. You can actually beef up your portfolio 10% or more per year at least by utilizing those.
Yeah. Mm-hmm. Tom, what's your take on it? How you ever sell options?
The chat are loving the options conversation, by the way. Yeah, it's very difficult to get access to options in New Zealand. So short answer is I've never touched them. We got a super chat from we got a super chat from Frank. Frank's asking us, okay, is this like a marry kill in the other one?
It's like
stock market version.
Was it like
long
smash pass or date marry kill, something like that? I like it, Frank. I like it.
Long pass short. Okay, I'll go first. I'll give you guys some time to think about it. So I'm gonna go. This is tough. Long all three really, easy. But I'd go long 10 cent. This sounds dangerous, but I'm gonna.
This is easy.
Oh no, yeah, okay. I'm gonna go long 10 cent. I'm gonna short Facebook, and I'll pass on Costco.
You're an idiot, Tom. You're an idiot.
You're an idiot to short any of those, I think. But
I know.
To pick one. What do you guys
go? I'm gonna go long Facebook. I think it's the easiest money in the stock market as we speak. I'm probably going to short Costco. I think it's a terrible business to short, but I think if we're just speaking strictly valuation, I think it's offering the lowest yield of all of them. I think Costco has been overvalued for a while, and then I think I'll just pass on Tencent. Although, if I had the option to go long on Tencent, and I wasn't invested in Alibaba, I would. If you're giving me the option to pass, I pass on like 99.9% of stocks anyway. So I'll just pass Tencent. That's fine. Yeah, easy. Give me something harder. That's what she said.
That's rough.
Scott.
I'll go next. Very similar actually to Andrew. So I'll say long on Facebook. I actually think Facebook is going to be the largest company in the world in the next 5 to 10 years. Bigger than Microsoft, bigger than Apple. If I had a short one on the list, I wouldn't short any of them. But if I had to, it'd be Costco. Similar to what Andrew said, just on valuation. Still amazing company though. and then I'll just pass on Tencent because I just haven't done enough research on that to determine how much value there is there.
2 peas in the pod, Justin.
Yeah.
2 peas in the pod. What about you guys?
I guess I'll go next. So definitely I would long Costco. I just like the business model of Costco, and I just like all the parts of Costco as far as like the way it treats its employees, the way it handles customers, all of that stuff. And I think like that, again, I'm big on stories. So the story of Costco is just beautiful and I like it. I'll short Facebook because I just don't like the company at all in any shape or form. So short Facebook, even though I use all the products. So short Facebook and pass on Tencent, even though, well, I don't really have any thoughts on Tencent, so just pass on it.
What do you got, Fiona?
I would say I would go long on all three if I could, but I would say I would go long Facebook, pass on Costco, and short Tencent.
So I've got a mix of answers here.
I think I can understand. I was gonna say I can understand the shorting Tencent. If like, are we doing short-term shorts? Like, do I have to just be shorter for? Is there like a time frame, or can I just like short-term short it? Because
short until bankruptcy. That's the game.
Oh, well, Jesus! Like
either company bankruptcy or personal bankruptcy, depending on which way it goes.
I guess your best bet there would just be a gamble. Would be Tencent because you'd be like, I just hope something f's up in China. But yeah.
No, I'm hoping that the market doesn't, like Monish said, right? Like they don't understand the difference between risk and uncertainty, and the market's uncertain about what's going to happen, and they'll just start selling, and hopefully that's my take on shorting Tencent.
Someone just popped in my house.
If anyone's still viewing right now, Tom, I'd like to let's talk about something real valuable here. What's something top of your mind that you think would be important for viewers to like listen to, like to hear from other people? Huh? I'm taking over this chat now.
I think we had a pretty important question come up yesterday around kind of going back to this whole Monish Prabrai sells Alibaba after everyone clones the shameless cloner kind of conversation. I think that's a valuable one to cover. Like a lot of
a thought process on it, or
thought process on cloning. I think it's good to have something in place for when these situations come up. Like if you're just someone shamelessly cloning Monish Prabrai without doing work on Alibaba, and then you see him turn around and sell it at the same time that Munga's buying it, and you kind of get stuck in like no man's land of not quite knowing what to do. Whereas my perspective is like it's one thing to clone the idea. It's another thing again to kind of clone the conviction and understand the business and know what to do if the price goes up or down or sideways and someone buys it or whatever. I don't know if you guys have thoughts on that.
Yeah, I could definitely speak to that. I look at cloning a little bit differently than I think the conventional term for cloning. I think I look at cloning as having, I think, honestly, Monish has said this like years ago in an interview, but it's being able to see super investors' portfolios and stuff is like having free analysts. The best analysts in the industry work for you. Completely free as well. Now, it's like the way I look at it is like me being like a CEO or something. I can have 1,000 ideas pitched at me from these amazing analysts, but I can pass on all of them if I want. I don't have to say yes, right? Like you don't have to swing you a bum in the Warren Buffett reference. So that's the way I look at cloning. For example, there's YouTubers out there who I think have phenomenal track records. For example, Jeremy from Financial Education clearly has a good track record. However, as of late, I think there's a lot of companies I don't agree with. Doesn't mean I have to buy every single one that he's saying. So I think I use stock recommendations. For example, I watch Justin, I watch yours, Frank's, if he's still watching, right? I've watched his videos as well of stocks on their watch list and stuff. All of people who I respect and I think have really good ideas, but when they come in, I assess it and I go, does this fit my own personal investment framework? right? For my latest investment, Boston Beer Company, right? I'm sure it probably won't fit your guys' framework, maybe, and that's perfectly fine. So that's the way I look at cloning. I think if an idea comes in, take a look at it, but then you need to be able to build that conviction yourself. And that's obviously what you were saying, Tom. Like, I built my conviction in Alibaba. Charlie Munger invested in it. Monish Pabrai invested in it, and Phil Town, a bunch of these other guys, Andrew Rosenblum, right? They all bought Alibaba, but I really need to do my own due diligence first to make sure it fit my own investment framework. Now, ultimately, I came to the decision of yes, it did. So I'm continuing to hold, and it's also important to remember that people buy something when talking about equities and stuff for one reason and one reason only, which is because they think the price is going to go up over the long term. They sell for countless other reasons. So just because he sold doesn't necessarily mean that he thinks it's going to zero or something like that. There's 1,000 other reasons he could have sold. So yeah, that's my take on it. I'm not really worried about it. If I was worried, I would have done a lot more due diligence when Justin posted his video. I saw the headline and I was like, yeah, I'll watch that down the line. I got other things to do right now. Like, it doesn't faze me. I bought Alibaba with like a 5-10 year vision, so that's the way I look at it.
I like it.
Yeah.
Well, we've
Man,
got
I would
another
love
super
to
chat.
say.
Sorry, go Kalichi.
Yeah, I was just gonna say I would love to say that I was as thoughtful and as mindful. I say this to Tom. I said this to Tom when he came on my podcast. I was like, I watch you guys' channel because you guys are like actual value investors to me, and I'm just kind of like type of investor where I'm like very lazy with a lot of things. I would love to say like I actually like did all my analysis. Like, I did a little bit of research in Alibaba, and I was like, oh, it looks pretty good. Everything looks on the strong side. It's just some downside stuff. So when I did see Monish sell, I'm not gonna lie. I've made a few videos where I'm like, I don't like this pain that I'm feeling right now because it just does not add up for me. But I think part of it is also kind of, I always say, like, you don't know a business until you own the business. So now that I'm in Alibaba, I've been forced to pay attention and learn a lot more about it than I ever thought I would ever learn about any Chinese company in my entire life. But kind of like you said, you grow your own conviction and your own strength, and just like, okay, I'm in this now. I have to make my own decisions. It doesn't matter what happened prior to this, but now that I'm the one that's making all the steps, and it's my money at the end of the day, and it's my capital. I worked hard for this money every single day that I go to work. So now I have to figure out, it doesn't matter what Monish did. It doesn't matter what Charlie Munger did. It doesn't matter what anybody else does. It matters what I'm doing and how I'm thinking about it from here on out. So it's a great starting point, but then it can be your ending point as well. You have to also build up some kind of level of conviction, or just, throw it away after a while.
One thing I want to hop in and say, he said, y'all are value investors and stuff. I just want to say, I absolutely hate that term with a passion. Yeah, I have like the viewpoint of like Warren Buffett. It's like all investing should be value investing. You're trying to buy a dollar bill for like less than what it's worth, or whatever, or you're trying to buy a dollar that will grow, and you'll pay $1 for a dollar that will grow into $2. So, for example, Peter Lynch, if you ask him, was he a value investor or a growth investor? 99% of people would say he's a growth investor. I would say he's a wonderful investor. He's not a growth or a value investor. He's a wonderful investor because he just gets this. Keep it simple, stupid. Don't toss labels, bro.
It's easier to categorize. Like,
no,
we're not going to put
don't
Warren Buffett and Cathie Wood in the same.
Are you putting money out today to get more money in the future? That's all investing is.
That's true.
Grow your capital.
True.
Yeah, I like that framework. I think you should change your channel name to Andrew Latender Value Investor, if that's how you think about it.
I want to just make it keep it simple, stupid. I fell in love with that phrase, like, I don't know, a year ago, and like in my Facebook group, I post it all the time. I'm like, just like I like people will sign like their name at like the bottom of something. I just like sign it, keep it simple, stupid. I'm like, nice. Coca-Cola's earnings have gone up. I don't know, I'm pulling a number out of my butt. Coca-Cola's earnings have gone up 500-fold since they went public. Their stock price has also gone up 500-fold since they went public. Keep it simple, stupid. Like, it just, certain things just make sense, you know?
Yeah.
If it doesn't make sense, ignore it.
Yeah, we better get to Frank's super chat. Appreciate that, Frank. His question is, how many holdings is ideal in a portfolio and why? I'll tackle this first maybe, and then you guys can have a crack at it. But yeah, we're probably going to get a wide range of answers on this, I suspect. But for me, I guess I've always been a big fan of like the punch card analogy of just find 1 to 2 stocks a year and you're kind of job done. You don't have to buy 50 stocks a year and churn half the portfolio every year or anything like that. So for me, as someone who's trying to think of stocks as businesses like they obviously are, and follow what the business performance is and what the price is and so on, I think there's going to be a limited number of businesses that you can reasonably understand and that are at an attractive price. And also just in terms of time, like if you actually want to follow a business properly, there's going to be a limit on how many you kind of have in your portfolio. So for me, fully invested, it's probably going to be no less than 5. I just probably don't feel comfortable being more concentrated than 5, but maybe no more than 12 or something like that. But I've never actually been that diversified either. I haven't punched enough holes out of the card yet to kind of get to 12, but that's a rough kind of range that I think just fits my personality. What do you guys think?
For me, I like to kind of stick to 8 to 12. That's kind of where I like to be. Last year during the whole pandemic, I think I got my portfolio up to like 16 or 17 stocks, which is way too many. I had a hard time keeping up with earnings calls and earnings reports and all that. So for me, I kind of like to be in the 8 to 12 range. And I think, truth be told, if you have really, really high conviction in a stock, I could see myself getting up to 25, 30, 35% in a single stock, and that's okay. If you look even at Warren Buffett, he owns 70, 80 stocks. Most of his stocks, or at least high percentage stocks, are, top 3 or 4. I think Apple, one time was 30, 40% of his portfolio or something like that. So, and I know Moshe has always talked about around 10 in his portfolio typically. So 8 to 12 is perfect for me. No more than 12 because I just can't keep up with the quarterly earnings and annual reports.
For me,
go.
Okay. So for me, it's 5 companies make up about 50 to 60% of the portfolio, and the rest, I buy them with the thought process that I'll buy more if the prices go down. So sometimes I pretty much would have like 5 or 10 stocks or shares in the portfolio, and then the prices go up. So then I never touch it. And so I have those tiny ones that are in there with the thought process that I would add more. But holistically, the ideal portfolio, 10 to 15, no more than that. But 5, the big 5 would make up about 60% of the portfolio.
I like it.
Yeah, I don't have a set number really. I think it's like arbitrary to just think of like, or I think it's stupid to like think of like this arbitrary number and say, oh yeah, this is what I want in my portfolio. I'm obviously like constantly evolving, as for the past 5 years that I've been investing. I'm like no way a professional, obviously, but constantly evolving. And what I've realized lately is if I'm not willing to put, let's say, pulling a number out of here, but let's say for me, $50,000 is a significant chunk of money. If I'm not willing to put $50,000 into a single business, and I'm not that confident in it, I don't have that much conviction, then I probably shouldn't own it. So for me, I think lately I've been building my conviction up to $40,000 bets, fully built out, like Trulieve, Alibaba. Those are all full bets of mine. I put that much in, and then that's it. Now, as my portfolio grows, as my capital, I should say, grows and I get more and more cash, that size bet will probably increase. But I think maybe 5 to 10 would be like a comfortable amount, but I don't think of it, like my brain doesn't work that way. I don't think of like before I make an investment, I don't think how is this going to fit in my portfolio. The way I think of it, and maybe this makes sense to you guys, maybe it doesn't, but like the way my brain views it is I'm taking eventually, maybe if the stock gets low enough, but I'm going to eventually take $40,000 and hope that this doubles or triples over the next 5 years. And that's like I just make big bets on stuff and hope it all plays out. My brain just doesn't work the way of like, okay, structure it with X amount of companies, and it's just like, is this going to make me a lot of money? And am I super, super, super confident? If not, then there's no point in owning it. But I don't think of like in terms of how many stocks. Like I think right now I have like 6 or something. That's because, well, minus Corsair. Corsair was because it got called on options, as Justin knows that. But the other 5, it's like if they were all fully built out, they would be massive bets, and that's just the way it is. For example, Facebook, I put significantly less amount of money in than I did for Alibaba. But that's just because my portfolio was a lot smaller back when I made my investment into Facebook. But it had nothing to do with like, oh, how many stocks am I going to own, or split it up. I at the time, I think $20,000 was like, this is a big bet of mine. Now my big bet is $40,000, and hopefully one day my big bet will be $100,000 or $1 million. But I don't think in like terms of numbers of stocks. I just think, what am I willing to bet, and hope that all plays out. So yeah, sorry I drawn out again, but I hope that kind of answered the question. Like I don't think in terms of how many stocks in a portfolio. I just think in terms of, am I going to make a lot of money on this or not?
Yeah. So I'll say, for me, I tend to think about it in size of how much money do I actually have. So off bat, when I first started like trying to pick stocks, because for the longest time I didn't think about investing or anything like that. All I did was passively invest into my Roth IRA and 401k, which is, for our international viewers, those are our tax advantaged investment accounts we have here in the States. But that's what I just did for the longest time. And so when I started picking stocks, I wanted to own all of them. I was like, I like this company, I like that company. I wanted all the stocks. And then I learned a bit. I learned more and understood more. And one of the things I'm understanding more and more is you can have a bit more stocks if you have a larger portfolio. If you don't, and then if I had like a $1,000 portfolio, but I had like 100 stocks in there, it's like, it doesn't matter. Like nothing is moving the needle at that point. Everything is just kind of getting slapped to the side. So for me, it's more of a, how much money do I have to invest? And then kind of to the point that I've said earlier, I don't hold any cash, or I don't like cash in the first place. So I'm always going to be dollar cost averaging into that position to build it up eventually. So I don't know when that position will be ever fully sized. My main thing is always like, if it falls into the range of what I think is a good price point, I'm going to buy it. And whatever it is, whether it's like I'm buying $50 worth of that or $100 worth of that, which on the surface level is like, that's not a lot of money. But for me, it's building it up over time to wherever it gets to. And so it's just making those decisions over time. So I don't know, kind of to what Guillaume said earlier, is some position I'm happy with where they are. And some, I have a bunch of stocks that are like $10 positions that I was like, oh, let me put $10 in here so I can learn from this a little bit. Because I don't know why, but for me, I need to put my money into something to force me to go be like, okay, I should actually learn about this stuff. I should actually like understand where I'm putting my money in. Otherwise, I'm just going to be like, I'm going to learn about it at some point, but I just won't, because I'll just be like, there's better things I can spend my time doing, more enjoyable things. As much as I love looking at stocks, I don't love looking at it that much. So it's just like, I'd rather just do something else. So when I put my money to work, then I'm employing myself to go to work to do the research, essentially. But that's the way I think about it. So there's no, I don't have a set rule of like, I need to have only 10 stocks or anything like that. I just like, at some point, Warren Buffett only had one stock. And then, over time, he's bought more and more companies, and he owns a bunch of companies. And so, and especially if I have good conviction in a company, I actually won't keep up with it that often. It's only early on in the process that I'll keep up with it regularly. But then after a while, I'll just be like, oh, how'd they do last quarter? Cool, moving on. And I won't do like any more that much attention to it, unless something weird happens overall. But yeah, I'm a lazy investor compared to most people. I'm just gonna say that.
Mm-hmm. Yeah, I think the other thing to keep in mind, and Justin, I think, kind of got at this before, is it does come down to the opportunity set at the time a little bit. Like when we have big market dislocations like March last year or whatever, the opportunity set can change a hell of a lot compared to what it looks like right now. And maybe suddenly you do get more diversified, or like Pabrai talks about in the financial crisis, like the entire commodity sector just got destroyed, and it all happened so quickly. He didn't really have much of a chance to actually look at any of the stocks in depth. So he made like a took 10% of the fund or something and just did a basket bet across a bunch of different commodity companies. So there's interesting kind of situations you can get into when that kind of plays out as well. So I think it's important to be flexible. Let's maybe take one last question and then we'll wrap it up. I think, you guys seen any questions you really want to have a run at?
After dinner investor is just popping up with a bunch of good questions. Like, which one do we take?
Okay, well let's take his one on bonds. I think that's kind of interesting. A bonds are part of anyone's portfolio anymore. Boomers did the 60-40 kind of portfolio, and they have all the money. Is that what we should be doing, guys?
Will it grow my portfolio at 26% per year? Keep it simple, Stu. The answer is no.
Like
you can probably assume if I own bonds or not.
I have some tips in my portfolio, so that's just a safe way to park cash in case there is any inflation, a hyperinflation, then it will pay off, and because at those times stocks do tend to go down. So I think it's important to have a little allocation in tips, not necessarily bonds, because you lose money with just investing in bonds with time value of money. So that's all.
So is that some sort of like inflation adjusted bond instrument, Bjorn? How does that work?
That's Treasury Inflation Protected Securities. I think that's what it stands for, TIPS.
Mm-hmm.
Okay.
And so it's adjusted for inflation. So if it does go up, then it'll reflect the inflation. Same with hyperinflation. Now, if we have devaluation, then yes, you're going to have the same effect the other way where you would lose money. But and the way we're going, it's more likely that it's going to be an inflationary scenario rather than a deflationary scenario. So that's it.
I wish we had talked about inflation a little bit because I have some hot takes, but that's besides the point. I think like bonds to me are a time issue more than a thing, because I'm pretty sure as I get older, I would rather have the money. It's like I'd rather have one in the bird than two in the bush, because when I get older, I'm not trying to keep investing like crazy like this. I'm gonna be spending money like left, right, center. That's why I'm doing all the stuff that I'm doing now, so that when I'm older, I don't have to think about it. I'm just gonna be like, yeah, we spraying this bread, like everybody getting a piece of this. So that's the plan. So at that point, I'm gonna need yield assets. I'm gonna need income providing assets. So to me, at that point, bonds are gonna play a key role. Hopefully, interest rates are not still zero, and of course, it's also going to depend on what interest rates are doing. Bonds are going to play a key role. The dividend producing assets are going to play a key role. So options are probably going to be part of that as well, in the sense of trying to generate income as well. So I think for me, more than anything else, like I just think of everything through time complexes, because I think we change over time and we evolve with the way we think about situations, and situations evolves. I mean, in the past, it was nuts not to have bonds because they were paying you like 10%. Like that's crazy. Like when we had 10% interest rates, like who wouldn't take that at any point in time? That's amazing. But now it's like we get what, 1%? Like nobody wants that. Like you can get much better. If I'm going to get 1%, I might as well just invest in Apple and Microsoft, which will give me much better capital appreciation as well. But I think it's like, for me, it's more of as time goes on, my mindset is going to change. I'm going to want less risk on assets because I'm going to need that cash to do whatever it is that I'm doing when I'm an old man, and all that good stuff. So that's the way I always look at the whole bond thing.
Yeah, I like it. I think pretty similarly. Like a lot of those 60-40 rules and all that sort of stuff, I think made a lot of sense for a long time. But when you get into extremes of interest rates like we are right now, it kind of makes no sense. Like if you were to, if you're putting money into most US bonds, at least, your real return is negative, even if you're getting 1 or 2% from the bond, because inflation is higher than that, right? And then if you're investing in a long-term bond, if interest rates do go up to something more normal, the kind of capital value of that bond's likely to get crushed. So if you ever need to actually sell that bond, that's going to be you're going to be in a predicament, and you're kind of just going to have to ride that out for the full duration, I think, to get your capital back in that situation. So I think that's one of the reasons why a lot of sort of quote indestructible kind of companies trade at kind of premium valuations. I think people see like a MasterCard or a Visa or something like that as a kind of a bond alternative where maybe they're happy to pay 40 or 50 times earnings and earn a couple % a year. And kind of that is what it is. They view that as maybe safer money, and that's kind of where things are going. I mean, you could also look into preferred stock investments as like some sort of income producing vehicle, but that's obviously riskier, a lot riskier depending on the company than a T-bill or something like that. But yeah, I think it makes sense with the current environment to be more in stocks personally.
Yeah, I know for me personally, even 20, 30 years from now, I don't really see myself buying bonds. Even if a bond was to, guarantee to pay you back 7, 8, 9%, I strongly believe that, you have a much, I think it's much better way of investing into equities and high conviction stocks that you've done a lot of research on, that you understand, that will provide more value back in the long term, even in the short term, I think too. So even I understand logically, how bonds are less risky, and it can be guaranteed percentage back. But for me personally, I never see myself probably buying bonds even in my later years. I think being in the stock market, I mean, I'd rather put money into like an S&P 500 ETF or something like that than bonds. But I do understand why people do it and the benefits of that in general.
Mm-hmm. Yeah, cool. I like it. All right, guys. I think let's wrap it up there. We've been going for an hour or so. That was good fun. I appreciate having all you guys on. It's been good kind of getting to know a few different YouTubers and collaborate with everyone. So thanks to everyone who watched as well. Like I said at the beginning, if you want to check out any of the YouTube channels of the people that have been on this stream, that will all be in the description for this video, and the pinned comment, and also in the description you should find the Movember link. So if you're interested in contributing there at all, that would be much appreciated. But yeah, I think that's all we've got. Next week will be back again with team sort of New Zealand and Australia as part of the Margin of Safety team. And in 2 weeks, we'll have you guys back for another live stream as well. So this was good fun. Thanks everyone for coming on.